Greetings, members one and all of the Salivation Nation. Gold and silver are up as the spread between the spot price and futures prices go down, and premiums are starting to ease back a bit. Are we coming back into a normalcy again in terms of precious metals prices and premiums and spreads? Let's explore. Yes, indeed. We can see here are the metals prices. Gold is up $33.60. That's a 2% increase. But silver is outperforming gold, at least today. 54-cent increase. A 3.61% increase in prices there. Well above $15 again. And platinum is up $9. And palladium is up almost 4.5%, a $75 increase in the price of palladium there. So gold is settling after a 2-session decline here in this article from MarketWatch. And even with rise of weekly U.S. jobless claims, it feeds economic concerns, and that is what is causing some of the prices to go up here. Gold ended higher on Thursdays, following losses in the last 2 sessions, finding support as the latest weekly climb in U.S. jobless claims fed investor concerns about the economic impact of efforts to contain the COVID-19 pandemic. The U.S. weekly jobless claims report reminded traders and investors of the severity of damaged state of the U.S. and other major world economies, said Jim Wyckoff, senior analyst at Kitco.com. And I kind of figured that we'd come back into bullish territory with the metals, especially after, the prices went down after news of states starting to reopen. I knew that would be short-lived. Almost 3.2 million people applied for unemployment benefits last week after the coronavirus cost them their jobs. The number of initial jobless claims processed in the week ended May 2nd was less than half the crisis peak of 6.9 million at the end of March. Still, some 33 million new claims have been filed in 7 weeks. Now, I would hope that most of these would be temporary layoffs and that when businesses start to open again, these people will be rehired. The report comes ahead of the monthly employment report from the U.S. Labor Department, which is expected to show a loss of over 20 million jobs in April and an unemployment rate north of 15% after a jobless rate of just 4.4% reported in March, said Wyckoff in a daily note. On COMEX, June gold rose $37.30 to settle at $1,725.80 an ounce on COMEX. Meanwhile, July silver rose 57.5 cents, or 3.8% to $15.59 an ounce. Gold lost more than 1% on Wednesday as the U.S. dollar strengthened, and the reopening of some economies around the world appeared to dent demand for the haven metal. It's not the case for today. It's amazing how quickly the news cycle can change and how the sentiment can change. It's psychology in the markets, and that is what we are seeing here today for sure. In Thursday's dealings, the U.S. dollar turned a bit lower, with the ICE U.S. dollar index down negative 0.23%, a gauge of the currency against a basket of 6 major rivals, down 0.3% at 99.83 after an earlier climb above the 100 mark. U.S. benchmark stock indexes were up as gold futures settled. The precious metal often trades in an inverse relationship with stock and the U.S. dollar. In our view, historical correlations are rules that can be broken, and we think that these days gold can continue to win even if equities improve, as investors are acutely aware of the risk and that they are taking and will seek out hedges like gold, said Christopher Looney, analyst at RBC Capital Markets, in a note. I agree. I think overall we're going to see the sentiment bullish for gold, with little dips in between that will barely shatter our confidence, I think, at this point. On Thursday, the Bank of England left interest rates unchanged at 0.1% and held its quantitative easing program steady through, though a scenario published by the central bank shows the UK economy falling 14% this year. Aggressive monetary policy easing by major central banks has offered support to gold as nations around the world move to stem the effects of the pandemic on their economies. For now, Clinton Karnani, chief market analyst at Insignia Consultants, said traders will prefer to be long in gold than short before the U.S. April non-farm payrolls data due out Friday. And it talks about copper and platinum here and rose. We talked about those earlier. And it is interesting. Now, it says here globally, gold-backed ETFs added 170 metric tons in April, lifting total holdings to a new all-time high of 3,355 metric tons, according to a report from the World Gold Council released Thursday. That's interesting. Continued record growth for gold-backed ETFs, despite some rebound in other asset classes, highlights that investors are embracing gold's role as a store of value and a source of liquidity and returns, Juan Carlos, Artigas, head of research for the World Gold Council, said in a statement. And, and that is kind of where things are. There's still a lot of unknowns out there. The full effects of the economic impact are to be felt, although people who have lost their jobs, they certainly are feeling it now. But there's certain aspects of the economy, GDP numbers and things like that, and when it actually is declared a recession, I think are going to have an effect on gold prices and silver too. But the fact that silver moved up and even outperformed gold at this point is a sign, I believe, that silver is being viewed in this particular day as a safe haven, especially when it's outperforming gold. And it's because there's less industrial demand. And so I think this gives us bodes well for silver here on today's activities. Other good news, at least for gold here, is that the spread between spot gold prices, and futures have normalized again. This comes to us from Kitco, Alan Sikora. The spread between spot gold and future prices has largely normalized now that 2 Swiss refineries are operating again, said Commerzbank. The refineries were among the many businesses around the world that were locked down for a while as part of the global effort to combat the COVID-19 pandemic. This contributed to futures prices rising as much as $70 above spot metal, a spread the industry veterans said they had never seen before. However, 2 of the world's biggest gold refiners, Valcambi and Algor have resumed operations, making significantly more supply available to the market. Swiss refineries process some 1,500 metric tons of gold annually, which Commerzbank said is roughly 1/3 of the global supply of gold. The price differential between the gold forward contract for short-term delivery in the COMEX in New York and the spot price in London, which had risen significantly as a result, has likewise normalized again now that the Swiss refineries have resumed normal operation, said Commerzbank analyst Karsten Fritsch. Both prices are virtually on par again. The futures are now only a few dollars an ounce higher. As of 9:05 a.m. Eastern Time, spot gold was $10.15 higher to $1,695 an ounce when this article was written. But while the most active June futures were up $10, so there it is. And again, we're seeing where the prices are now. Gold is now well above $1,700 an ounce, $1,718.50 an ounce for the ask price. Still a dollar between bid and ask, but it is interesting and fascinating to see where the metals prices are going. And I'll also note that some of the premiums we're starting to see normalize a bit, as well as you're seeing some of the metals being delivered now. There's certain bullion dealers that are getting monster boxes of product, and that's good news for those of you, especially who want to take advantage of these lower silver prices right now. When you start to see, now it's very slow. There's still some places that are still charging ridiculous premiums, but the free market will start to work itself out. And when dealers start to see other places charging less, well, they're going to lower their costs too. Just a matter of time before that happens. So there you go. Fascinating and interesting information for sure. Post your thoughts below about this news, about what's going on here with the markets, the precious metals going up on renewed concerns. I think we're going to see more days like this. And I believe we'll see days where it kind of eases back, especially as states start to announce their phase 2 opening. But even with states fully opening, and with the aspect that the economy is not going to really show that much improvement, in fact, we could see it take a downturn even more before those dollars start to circulate, the velocity of money and the economic engine start to restart. The psychology is going to play a part, and there's going to some people that will be expecting it to move a lot faster than it is. Therefore, it will have an effect on the markets, and people will, what will they do? They will run to the safety of gold and silver. And silver at this point is acting as a safe haven in my view. I believe that strongly. Today's price movement shows that. Post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, share, comment, and subscribe.